Hi, welcome to my channel. This is Kauserwise and this is the continuation video of cost of capital. In the previous video, we have seen cost of irredeemable preference shares. In this video, we are going to see cost of redeemable preference shares. You can find the playlist link in the description box. Now let's get into the video. See, before we see the numerical problem, let us try to understand the basic concept of redeemable preference share capital briefly. Okay, see, if the preference shares are redeemable, redeemable means repayable at the end of a specific period. For example, after 5 years or after 7 years. Okay, then the cost of preference share capital can be calculated by applying this formula. Okay, so this is the formula to find out cost of redeemable preference shares. RPS stands for redeemable preference shares. Okay, the formula is annual cost divided by average value of RPS. Okay, so here you have to calculate two different components in order to find out the cost of RPS. The first component is annual cost. Okay, the formula is preference dividend per annum. So how much dividend that the company is going to declare every year per annum we have to take, that will be the starting point, and we need to add certain things and we need to subtract certain things. The first one is issue expenses. If there is any issue expenses, okay, that has to be amortized per annum. That is the total expenses divided by the tenure of the preference shares, redeemable preference shares. For example, 7 years means the total expenses divided by 7 you will be getting per annum. Okay, and then in the same way, the second one is add discount on issue of preference shares. If the preference shares are issued at discount, in that case that amount need to be amortized per annum and that will be added along with the preference dividend. Okay, and the next item is in case of premium on redemption. Okay, at the time of repayment, if the company decided to redeem at premium, that is also loss for the company. No extra amount they are going to pay. No, so that amount need to be added along with the preference dividend in order to find out the annual cost. Okay, again I repeat, the starting point is preference dividend per annum plus issue expenses if any plus discount on issue. Okay, and the next one is premium on redemption. So these are the three possibilities we need to add. And the next item is only one item we need to subtract, that is premium on issue. Okay, so if the company decided to issue preference shares at premium, either discount or premium, no, in case of discount we need to add, in case of premium we need to subtract. Okay, that is premium on issue amortized per annum. Okay, so this is the formula to find out annual cost. Now let's see the second component, that is average value of RPS. The formula is net proceeds plus redemption value divided by 2. Okay, so how to calculate net proceeds? There are three different options are there. No, if the issue is at par, this is the formula, that is face value minus issue expenses if any. The total issue expenses need to be subtracted from the face value in order to find out the net proceeds. The second one, issued at premium. If the company decided to issue at premium, then you have to follow this formula to find out the net proceeds. The formula is face value plus premium minus issue expenses. Okay, in case if the issue is at discount, in that case instead of premium we need to subtract discount. So in case of premium add, in case of discount subtract. Okay, so face value minus discount minus issue expenses. So these are the three different cases in order to find out the net proceeds. The next one is redemption value. RV stands for redemption value. So redemption value will be given in the problem. Suppose if the company decided to redeem at par means take the face value. In case premium means face value plus premium. Okay, so according to the problem you can find the redemption value and it will be given in the problem. You need not calculate anything. Just take the net proceeds plus redemption value divided by 2 in order to find out the average value of redeemable preference shares. Okay, then you can apply the formula to find out the cost of RPS. Now let's see the numerical problem for better understanding. See the problem. Wise Limited issued 10,000 8 percentage preference shares of rupees 10 each, redeemable after 8 years. The flotation cost were 2 percentage. Compute the cost of preference shares if it was issued at par, at a premium of 5 percentage, at a discount of 10 percentage. Okay, here they have given three different scenario for issue. Okay, the first one is issue at par, second one issue at premium, and the third one issue at discount. Okay, so with this information we are going to find out the cost of RPS. Let's see the solution. Let's see the solution. The first one is that is computation of cost of redeemable preference shares. First case, when the shares are issued at par. So what is the formula? Annual cost divided by average value of RPS into 100. Okay. So first we need to calculate annual cost. So what is the formula to find out the annual cost? First start with dividend. Preference dividend. How much? 10,000 into 10 rupees each, 1 lakh into 8 percentage. Okay, that is the preferential dividend per annum. This is the face value, 1 lakh into 8 percentage. So how much? 8,000. Okay, the next one is we need to add the flotation cost. Okay, see, the flotation cost is always calculated based on the face value or issue price, whichever is higher will be taken into consideration. Okay, so in this case, the first case is issue at par, no, so we can take the face value. The second one is issue at premium. In that case, we need to take the issue price because face value is only 1 lakh, whereas issue price is 1 lakh 5,000, 5 percentage premium, no. So in that case, we have to consider issue price. Okay. The third case is issue at discount. In that case, issue price is 90,000 because 10% discount, no. Face value is 1 lakh, issue price is 90,000. In that case, we have to consider face value. Okay. Whichever is higher will be taken into consideration for flotation cost. Okay. The next one is we need to add flotation cost per annum. So how much? 2 percentage on the face value. 1 lakh, no. 1 lakh into 2 percentage. You'll be getting 2,000 and we need to calculate the amortized per annum. So divided by how many number of years? The redemption period is after 8 years. So divided by 8, you'll be getting 250. This is flotation cost per annum 250. Okay, and the next one is so the first case is issue at par, no, redemption at par only because nothing is mentioned in the problem, so assume that redemption is at par only. Okay, now just find out the total. 8,250. So this is the annual cost. Okay, according to the first case. The first case is issue at par. Redemption also at par because nothing is mentioned in the problem regarding redemption. Assume that redemption at par. Okay, so that there is no discount, there is no premium. Simply you can take the dividend per annum plus flotation cost in order to find out the annual cost. The second one is average value of RPS. What is the formula for average value of RPS? Net proceeds plus redemption value divided by 2. Okay. So NP is equal to, what is the formula to find out NP? If the issue at par, face value, that is 10,000 into 10 rupees each, 1 lakh. The flotation cost how much? 2 percentage, no, that is 2,000. Okay. 1 lakh face value minus 2 percentage flotation cost, that is 2,000. So 98,000. This is the net proceeds. And what about the redemption value? Okay, in this problem, nothing is mentioned regarding redemption. Assume that redemption at par. Par means face value. Same 1 lakh. Okay, so net proceeds plus redemption value divided by 2. So what is the total? 1,98,000. So 1,98,000 divided by 2, you will be getting 99,000. So this is the average value of RPS and this is the annual cost. Now you can apply in the formula to find out the cost of RPS. So annual cost how much? 8,250 divided by average value of RPS 99,000 into 100. What is the answer? 8.33 percentage. Okay, so this is the cost of RPS if the shares issued at par. Okay, now let's see the calculation for the second one, that is issue at a premium of 5%. See the calculation. Shares issued at a premium of 5%. Okay, same formula. First we need to calculate annual cost. Okay, so what is the starting point? Preferential dividend. How much? See the problem, 8% no. So 8% on the face value. Whether the shares are issued at par or at premium or at discount doesn't matter. The preferential dividend is always calculated based on the face value. Okay. So 10,000 into 10 rupees, 1 lakh into 8%. That is the preferential dividend per annum. This is the face value into 8% dividend. 8,000. Okay, and we need to add flotation cost. How much? See the problem, 2%. I told you no, this 2% is calculated based on the face value or issue price, whichever is higher will be taken into consideration. And second case is premium no. So the issue price will be higher than the face value. So we have to consider this one, that is issue price. So what is issue price? Face value 1 lakh plus premium. Premium how much? 5% no. So 5% on 1 lakh, 5,000. So total issue price 1 lakh 5,000. This is the issue price. Now we have to apply 2% flotation cost. So 2% on 1 lakh 5,000, 2,100. This is the total flotation cost, but we have to calculate only per annum. So that divided by how many years? 8 years no. So what is the answer? 263. You can round up the figure. 263. Okay. 8,000 plus 263. 8,263. Okay. And the next one is issue at premium. Okay. So at premium means company is going to get extra amount. So that is a gain for the company. No, that gain has to be subtracted from the preferential dividend in order to find out the annual cost. Okay. Just subtract premium on issue. Okay, so how much premium? 5% no. So 1 lakh face value into 5% premium, 5,000. So this is the total premium, that is gain for the company. This you have to calculate per annum. So divided by 8. So what is the answer? 625. Just subtract this amount from this value. You will be getting 7,638. So this is the annual cost. Okay. The first component is over. The second one is average value of RPS. So what is the formula for average value of RPS? Net proceeds plus redemption value divided by 2. Net proceeds, this one is issued at a premium of 5% no. So that face value how much? 1 lakh plus premium 5,000. So total 1 lakh 5,000 minus flotation expense. So flotation cost how much? 2% no. Just see the previous calculation. 2% on 1 lakh 5,000, 2,100. This is the total flotation expense need to be subtracted in order to find out the net proceed. Okay, so 2,100. 1 lakh 2,900. This is net proceeds. Now we have to consider the redemption value. So redemption value is always 1 lakh because the redemption value is not given. Assume that the redemption is at par. At par means same face value, 1 lakh. So this one is net proceeds and this one is redemption value. 1,02,900 plus 1 lakh divided by 2. What is the answer? 1,01,450. So this is the average value of RPS. This one is annual cost. Now you can substitute the value in the formula to find out the cost of RPS. 7,638 divided by 1,01,450 into 100. What is the answer? 7.53 percentage. So this is the cost of RPS if the shares are issued at a premium of 5%. Okay. Now we are going to see the last case, that is when shares are issued at a discount of 10%. See the calculation. See the third calculation. Shares issued at a discount of 10%. Okay. So the same formula. First we are going to calculate the annual cost. Calculation of annual cost. What is the starting point? Preferential dividend. How much? 1 lakh face value, no. 1 lakh into 8%. 8,000 plus we need to add flotation cost. So as I told earlier, flotation cost is calculated based on face value or issue price, whichever is higher will be taken into consideration. And the third scenario is issue at discount. Okay, so discount means lesser than the face value. So instead of issue price, we have to take face value. Okay, so what is the face value? 1 lakh, no. 1 lakh into 2% flotation cost. So 2000 rupees. So amortized per annum, that is divided by 8. You will be getting 250. Okay, and then just find out the total 8,250. And one more thing, issue at a discount of 10%. No, this discount also loss for the company that has to be added along with the preferential dividend in order to find out the annual cost. Okay, so again add discount on issue. How much? 10%. No. So what is the face value? 1 lakh into discount 10%. So 10,000. Again amortized per annum divided by 8. You will be getting 1,250 per annum. This will be added along with this in order to find out the annual cost. How much? 9,500. So this is the annual cost. The second component is average value of RPS. What is the formula? Net proceeds plus redemption value divided by 2. So what is NP here? Face value because issued at discount, no. So face value minus discount minus flotation cost. Okay. So that face value 1 lakh minus discount 10%, no. So 10,000 minus issue expenses. So issue expenses 2%, no. Just see the previous calculation. Flotation cost is the issue expenses. How much? 2,000. Total amount 2,000. So 2,000. You will be getting 88,000. So this is net proceeds. The second one is redemption value. 1 lakh. Okay. So 88,000 plus 1 lakh, 1 lakh 88,000 divided by 2, 94,000. This is the average value of RPS. Now you can substitute the value in the formula to find out the cost of RPS. So annual cost how much? 9,500. Average value of RPS 94,000. Into 100. 10.11 percentage. Okay, so this is the way to calculate cost of RPS in 3 different scenarios. The first one is at par, second one at premium, third one at discount. Okay, in the next video we are going to see cost of equity shares. You can find the playlist link in the description box. Hope you like this video. Please hit the like, comment, subscribe and share with your friends. Thank you.